Okay, so what we're going to be looking at today is adjusted profits, and it's a very, very and interesting topic, and it's very pivotal to everything that you're going to be doing in tax because I mean the major part of taxation is company income tax. I mean, personal income tax is also major, but of course, um, the government places more premium on of course company income tax because that is the one that the federal government collects, that the FIRS collect on behalf of the federal government. Every other one is dealt with by the state government, by the state's inland revenue service, right? So what we are looking at today, like I said, is adjusted profits, and of course, it is more pronounced with the company income tax. So you should not be surprised that most of our calculations would be coming from the company income tax. All right. And what is why is adjusted why what is the need? Why do we have to adjust our profit? And when we say adjusted profit, what profit are we referring to in this case? We are referring to the profits, our accounting profits, right? Or the profit that we can find on our profit or loss account. So why do we have to adjust this profit? You agree with me that early in our lectures, I mentioned something that the laws that bind the accountants is different from the laws that bind, the tax professionals or the tax authorities. The laws that bind the accounting professionals are the international accounting standards, right? While the laws that bind the tax professional is the prevailing, you know, tax laws of the land. All right, and of course there are similarities, and I believe that you would have been seeing those similarities as we move up in our classes. One of the similarities is, for instance, when you are doing capital allowance. Capital allowance is like an um, an innovation from depreciation, or it's like a development. Yeah, let me say innovation, a development from depreciation, so that all of the flaws that depreciation tends to have, it is being corrected in capital allowance. Let me give you an example. In depreciation, um, we call it an estimate because it is subjective. All right, it is not universal. So different companies have different depreciation rates, peculiar to the company, peculiar to the industry, peculiar to the assets. All right. But in capital allowance, we looked at it that okay, this will not be fair. One of the canons of taxation is fairness. This will not be fair, right? For this person to be charging 20% and this person to be charging 35%. Okay, it will not be fair. We looked at it and we said, okay, let's have our own depreciation, a way to allocate our own, capital expenditures across the useful life of the asset of the capital assets in a way that it will be universal to all of the taxpayers. Am I communicating, please? So in a way that so it is like an inversion from depreciation. Another very good example that I would give, it is even drawing still within the capital allowance. Look at what we call our tax written down value. Our tax written down value is very similar to what we call our carrying amount, right? Because you realize that our tax written down value for the second year is equal to the costs of the assets minus the allowances. The carrying amount for the second year in accounting is the cost of the asset minus the depreciation or the accumulated depreciation. So we can see the differences, and all of these things is to ensure that every taxpayer is being assessed based on an equitable, you know, using an equitable method. So when we say we are adjusting profits, what we are simply saying is that we are adjusting for everything that is not in alignment with the tax laws. So the things that the accounting standards would normally allow, because they are coming in, because we are assessing the company for tax now, we have to like check those things pari passu the prevalent tax laws. All right. So you see what I wrote in the introduction here. I said, in preparation of the financial statement, especially where the taxpayer is a corporate organization, it is statutory obligation for such company recognized by statute to file its return at the end of every accounting year to the relevant tax authority indicating net profit or loss. However, the financial statement would have been prepared in line with the generally accepted accounting principles, international accounting standards, statement of accounting standards, international financial reporting standards, IFRS, pardon that, and statement of accounting policies. So all of these are accounting rules, accounting principles, accounting concepts. But when we come to taxation, like I explained already, we have to check. It is the responsibility of the tax authority to check the income of the taxpayer, income statement of the taxpayer, and ensure that it is in conformity with the provisions of the Company Income Tax Act. That is for corporate payers and personal income tax act for individuals. That is, we have to check against the laws that is binding this tax. These transactions that the company has allowed, for instance, are they allowable when it comes into Company Income Tax Act? Are they allowable for this individual? Are they allowable when it comes to Personal Income Tax Act? I hope you are following. Please, are you following? So the reason why we would do our trading profit adjustment is because we understand that there are some transactions that a company would have allowed in arriving at their net profit or loss. Please make sure you are jotting down. Please make sure you are jotting down. There are some profits or transactions rather that the company would have passed that when it comes under our tax laws, they are actually not allowable. They are not allowable. I mean, when I say they are not allowable, I mean they are not deductible. All right, you know the way our income statement is. We have our revenue, then we will deduct our cost of sales, then we'll deduct our cost of sales or our direct costs, then we'll deduct our expenses, operating expenses, and all of that. And several things make up our operating expenses. We have our depreciation, we have if we have provisions, we have provisions, we have office expenses. Different thing makes up the operating expenses. Right. Some of these things are actually would actually not be allowable under under taxation. And I'll give you a very please make sure you are jotting like I mentioned because it is majorly notes until we get to the calculation aspect. Um a very good example and a very good rule that separates the treatment of transactions under accounting and transactions under taxation is the concept of the accrual concept. Under accounting, they will tell you that records are done on accrual basis. That is, whether or not there is movement in cash, as the accountant, you have to recognize. That is the reason why we have what we call accrued income. We have accrued expenses. When you accrued expenses is the expenses that you already incur, but there's no movement in cash yet. You have not paid for it. It's just a liability hanging on you. Accrued income is the money you have earned, you have collected, but you have not delivered the service for it. It's equally a liability. No, sorry, pardon me. Accrued income is you have okay, yes, of course, I was right. You have collected the money, but you have not delivered it. No, no, that's on any on earned income, right? I think the other way is the accrued income. So regardless of what it is, in these cases, there is no movement in the cash. I'm taking my time to like lay a foundation so that you can be able to understand well. And if there's any point where you are confused, please just pause or mute and pause me and like ask the question. All right. But in taxation, we deal on cash basis. We have to see that the cash has moved because before we can recognize or allow a particular transaction. But in accounting, it is not the same thing. In accounting, we have things like accrued income, like I mentioned, accrued expenses. We have different things. We have prepayments, like recognizing even payment that we made in advance. They are necessarily not the same thing when it comes to taxation. All right, that is the reason why we have to check each of those transactions and adjust for them before we now arrive at our adjusted profit and then eventually our taxable profits or our total profits. Let me pause at this point of introduction and see if anyone has any question. Do you have any question, everyone? They call James. You're welcome. Do you have any question? Abiodun,
Not for now.
Okon Victor,
Nothing, sir.
are you getting it? Are you following? All right. Love it. You're welcome. They call James. Are you getting it, please? They'll call James. They'll call James. Oh,
Yes, sir. Thank you, sir.
eh? Who is that? Come again. I didn't get what you said. Okay. All right. Let's continue. So, in trading profit adjustments, the tax authority has to test the acceptability of both the income and the expenses on the income statement or on our profit or loss account. They have to test that these expenses actually pass the test of what the law describes as what allowable expense. So here I said that the tax inspector performs acceptability tests before expenses incurred by the taxpayers are accepted for tax consideration purposes. Now, this is the way it works. From January to December, let's assume that the financial period of a company is January 1st to December 31st. The accountant within this period would keep recording the transactions as it happen. And at the end of the year, we'll produce what we call financial statements. This financial statement will have five major accounts. It will have the statement of profit or loss. It will have the statement of financial position. It will have the statement of cash flow. It will have the statement of changes in equity, and it will have the disclosures to the accounts. All of this prepared based on accrual basis, right? However, at the end of that year, they have to file their accounts. Then they have to like now do what we know as what their tax computation. Tax computation is different from preparation of our profit or loss. In that, in preparing our tax computation, what we are doing is we are applying the tax laws, not the accounting rules now. All right. And when we are doing this, we are taking into cognizance what the law calls as allowable expense, what the law calls, taxable income and non-taxable income, allowable and non-allowable expense. Now, dealing with expenses, what does the law actually refer to as allowable expenses? Right? That when I say allowable expenses, what are the expenses that should be deducted, yes, from the revenue of the company or of the taxpayer? What are the expenses that are deductible? So the law gives us a guide. It says that this expense, and please jot this down. It's that these expenses must be rarely incurred. Let me try to do something here. It must be rarely incurred. I was trying to do something. Rarely as in WR rather ENLY. I'll put these first four letters in cap. It must be rarely incurred. And when we say rarely incurred, what the law is simply guiding us to do is we must see that the expense is only incurred, only as in all, that as in it is fully incurred for the purpose of the business. You cannot purchase a building, claim that it is for your business, meanwhile, it is your family that stays in it. You cannot purchase a vehicle, claim that it is for the purpose of your business, and the only thing you use it to do is to take your children to school. All right. You cannot say that you purchased a laptop solely for the purpose of your business, and the only and your business that laptop is in no way used to contribute to revenue, the taxable income that the company is generating. Do you get what I'm trying to say now? So it must be wholly. So the W here stands for whole, wholly incurred. If the entire amount of the expenses must have been incurred for the purpose of the business. You can see what I put here. It must have been incurred just only for the purpose of the business. If it is not that, then we have to now sit down and look at it. Okay, what part of it? Is there any part of it that is used for the purpose of the business? If there's any part of it, then it's only that part of that part that will be allowed. I hope that is clear. The second thing is that it must be, don't mind that it is not arranged here. This is just an acronym, just to help you to remember. It must be reasonable. It is possible for an expense to be only incurred for the purpose of the business. It is possible that it is exclusively incurred for the purpose of the business. It is possible that it is necessarily incurred for the purpose of the business, but it is unreasonable. And when we say it is unreasonable, maybe because of the amount that you got that the amount that you incurred. For instance, say you'd what example can I give? What example can I give? For instance, let me say that for transportation, for instance, maybe I don't know if not everyone stays in Lagos, so I'm trying to like use a very familiar example. Say for a very short distance, you are claiming that the staff you used maybe an exorbitant amount. It might not be reasonable in the sight of the tax authorities. That this thing, even if you want to like um if you want to do this thing luxuriously or this thing, you would have still spent this amount of money. It is not reason this expense is not reasonable. The third thing is that it must be exclusive. It must be exclusive. It is very similar to Oli. It must be exclusive in the sense that must be just that business that is benefiting from the expense that was incurred. Not that some people we are very used to this thing. Whenever we get to our office, we'll just be using the papers, the A4 papers anyhow. So people, I think at some point in my former firm, they have to like now how to like put a structure around it that before you take papers to go and print, you have to go to the admin office first, sign. This is the number of people I want to take. This is the purpose. This is what I'm using it for the printing of 2022 FS. Bam. Then you will go there. Then she will count the number of people that you said you need and give it to you. If it is not enough, you go back. You add plus two. You take it. All right, because a lot of us we are fond of using company stuff for our personal use, but an expense. The reason I'm saying that is that an expense that is allowable is an expense that is exclusively incurred for the purpose of the business alone, and only the business benefits from the expense. The fourth thing, which is the last one, is that it must be necessary. The expense must be necessary. It is necessary if we say that as the business, if I do not incur these expenses, my business will not be able to move. I will not be able to generate this income. And a very good example, if I don't fuel my gen with this epileptic power supply that we have in this country, sorry to say, it's going to affect the generation of my income. If I do not purchase office supplies, for instance, it's going to affect the administration of duties. It's going to affect income generation. So all of those are necessary expenses. If I do not fuel the delivery van, I'll not be able to make deliveries, and so there won't be income. If I do not pay staff salaries, staffs will strike. They will not come. They will not come to the office. They will sit down at home. Nobody to work. I cannot do the work alone. It is necessary. It is necessary. But say, for instance, you are now saying that, say, for instance, this one is a very obviously stupid one, anyways. Say, for instance, you now say that, okay, maybe the tax authority is now going through your books and you're now seeing things like MD's wedding or Shola's wedding or Abiodun's wedding or Muibat's wedding inside financial statements. They will ask you, wait, if you do not have this wedding, would this still work or not? It is a rational question to just ask. So is that expense? Is it necessary? So there are several tax audits that have been involved in, and we see all sorts of expense in the books of the taxpayer. All sorts, all sorts. All right. So is it necessary? Is it necessary? That's the question. So, and a very good example of this reasonable is I remember there was this tax audit we had at a point, and we saw an amount that was incurred as internet expense for one of the staffs, and we said we had to ask ourselves, what does this guy do? Is it the only one downloading all the this thing of the database of the this thing? We have to ask the question because we have to confirm, is the expense reasonable? Is it reasonable? If it is not, then we will disallow it. All right. When someone is using like a data of maybe 120K in a month, why? Then in 12 months, it's running into millions for just one person. It should not be so. So, would there have been an alternative, a cheaper alternative to it? Of course, definitely. So, is it reasonable? It might not be. If it is not, and of course, they would are now listed out. Of course, we are now listed out some of the things that can give us a clue to, reasonability of a particular expense. I said number one, the materiality of the amount, just like I said about this expense. Then, secondly, the amount of profit or loss for the period. Say, for instance, you you maybe you even claim that you made a loss, and we are going through your expense, and we are seeing that you are just allocating money and anyhow for operating expenses, and because of that, your books is now into the negative rather, is now a loss. Third thing is the practice in the industry. What is the generally accepted? What are the other people doing? Why is your own different? Why is your own more costly? Okay. The fourth one is general business environment. Okay. How much does this thing cost in this environment? All right. So different things that can give us a clue to the reasonability of an expense that has been incurred. Okay. And the fourth thing, I said the comparative amount of the same expense in prior year. So, for instance, last year you said that you incurred 30,000 naira on fuel. Then this year, all of a sudden, your fuel expense just jumping to 600,000. What has happened? Is it that you open different multiple branches? You must be able to explain the reasonability before we can allow it. So the way this thing works is that the company prepares its own tax reports, tax computation, and of course, most of the time they still allow a lot of these things that eventually the tax authority will still disallow. When I check some tax computation, I just now I say you people, you will still disallow this thing when tax audit comes. So now when the tax authority now does their own tax audit, they do a recomputation and then they provide an additional liability based on their own recomputation. Okay, so that is what tax authorities check when they check for the acceptability of expenses in the computation of adjusted profits, right? They check the expenses. The clue that I have given is that it must be rarely incurred. It must be only for the purpose of the business. It must be reasonable. It must be exclusive for the purpose of the business. It must be necessary. Necessary it means that without it, I will not be able to generate my income. And of course, I won't be profitable. All right. It must be necessary. So before I go to the format of the um coupon competition, I would just like to ask, is there any questions so far? Osana, you're welcome. Delco James, Loveth, you're welcome. Is there any question so far? Abiodun, is there any question? Is there any question? We're going to go through some expenses together and see if they are allowable or not. Abiodun, is there any question so far? Please unmute yourself
No,
and Okon Victor, what about you?
No, sir.
Are you getting the class?
Yes, sir.
All right. Delco James,
Good evening, sir.
good evening. Are you getting the class?
Yes, I just joined the class. This is Elizabeth.
Oh, Elizabeth. Oh, you're
Yes,
welcome,
sir.
Elizabeth. Sorry, I think you
Thank
told
you,
me
sir.
last class. So I
Yes.
saw you early. I saw you in the class before now. You have been in the class for a while now.
Yes, I told my son to set up for me, sir.
Oh, okay, that's fine.
Then we'll meet him.
Oh, okay, that's fine.
Thank you,
Please
sir.
pay attention going forward, please.
Yes, sir.
Love it. Are you getting the class? Are you? I hope you're. Oh my, you're not on your way. Love it. Are you in this class? Can you hear?
I
Love
am, I
it.
am, I am. I
Okay.
understand this better. Thank you.
All right. Muyibat, what about you? Muyibat, are you there? Muyibat, are you there?
Our
I'll
network
be
is not that.
okay. I'll be throwing out questions. Oh, I'll be throwing out questions
I
from
know,
time to
just
time.
joining back in again.
Ah, Muyibat, this your network. I don't even know what I want to do because I'm really feeling for you like this. And what are we going to do to this network?
Uh,
It is well.
I
It's
know
just
from
true.
next week it's going to be okay because that's when it's next week, honestly. Though tomorrow I'll do that in the office, which is going to be, I'll join the lecture from office and it's going to be fine by 5, which is, but
Okay.
for this till next week.
All right, that's fine. But please make sure you just follow up on the lectures on the YouTube page. Okay. I saw
Um,
Osana now.
we've
Osana,
not,
Osana left the
they've
class
not
already.
been, I'm not sure we're having any YouTube. Okay, which of the YouTube?
No, I
Hello?
sent the link to you. I sent the link to you.
Wow.
I sent the link to the. Just check the group page. I sent the
Okay.
link on the group page. Please check the group page for that. All of the lectures that we have had are being uploaded there.
Thank you.
All right. Usama left the class already. I
Oh,
was just
okay.
about to call
Thank
her.
you.
All right, let's continue, please. So now, just like we have for the other, competitions, we have like a format for our adjusted profits. So with two naira sign, and the idea is that we start from the net profits as per the account, right? Then we add back. We call this add back. So what are we adding back? We are adding back everything that the client, the taxpayer rather, has deducted that are not meant to be deducted according to the tax law, and everything that they have added that are not supposed okay, and everything that they should have added they should have added rather, but that they have not added. So let me take that again. We'll deduct every would we'll add back rather everything that they have deducted that they're not meant to deduct, and we'll also add back we'll also add rather everything that they are meant to add but they have not added. So that is what this is saying. Say that we'll add non-allowable expense included in the account. Non-allowable expense just simply means non-deductible expense. That is expense that according to law are not deductible. They are not meant to deduct them. Right. What they have been deducted. We have to add it. So what we are doing is just reversing what the accountant has done. They have deducted. To cancel it, we are adding it back. All right. Then secondly, there might be some taxable income that they have omitted as well. We'll add those ones back as well. All right. Maybe they are trying to like cut, some companies try to evade tax. So they remove some income. The more the income, the more the liability is meant to be, because the more the profit, the more the liability. The more the income, the more the profit, then the more the liability. So they try to like just streamline some profits from some income rather from this thing. But we'll now check, okay, are there taxable income that should have been part of this revenue? If we find part, we'll add this. Are there some expenses that are not meant to be deducted that have been deducted? If we find some, we'll add it back. All right. The second thing is that we'll deduct. So we are starting from the net profit as per the account, that is the profit or loss account. Then we are adding back non-allowable expense included in the account and taxable income omitted in the account. Then we will not we will not deduct the reverse. We will deduct non-taxable income omitted in the account. Here we are adding back taxable income. Here we are deducting non-taxable income omitted in the account. All right. And also we are deducting allowable expense omitted in the account. So maybe there are some expenses that actually like qualify to be deducted, but the client, maybe for the taxpayer, for one reason or the other, has decided not to deduct those expenses. I hope that is clear. I hope that is clear. Now let us check examples of non-allowable expenses. Examples of non-allowable expenses. The first one we're going to be looking at is what? Our capital expenditure. Our capital expenditure. So we said an identified capital expenditure is of the following nature. Number one, purchase of a fixed asset. Number two, overhauling of a fixed asset, that is replacing the essential parts of the fixed asset. Number three, refurbishment of a what? A fixed asset. All constitute capital expenditure, and such expenditures should be added back. Even in accounting, you don't expense capital expenditure. That's why they are called capital expenditure. So normally in accounting, we have two types of expenditure. We have the capital expenditures and we have what? The recurrent expenditure. Capital expenditure are expenditure that you get to enjoy what you spent your money on for more than a year. Most basically their expenditure on fixed assets, on assets that are non-current, non-current assets. All right. And the way we even treat them in accounting is not to expense them. It is to recognize them as capital expenditure, then allocate the capital expenditure by way of what depreciation over the estimated useful life of the asset. The same thing that we do, very similar thing we do also in taxation. By the time you say you want to be charging the entire, you want to be expensing rather the entire cost of the car that you just purchased. By the time you are done, it is not even rational because that same car you will still use it to generate more income in the future. So why do you want to deduct it from just the income of 1 year? So the rational thing is to spread that expense over the useful life of that asset. That is over the time of which you would use that asset to generate income, and then deduct the expense that is that depreciation from the respective revenue of each year. The same thing we'll do, I said, in taxation by the way of what we call capital allowance, which we already discussed. In capital allowance we say that it is the allocation of what it is a relief rather or allowance granted to taxpayers on the qualifying capital expenditure they have incurred and that they have put to use for the purpose of generating taxable income. All right. So in a case where we realize that a particular taxpayer has deducted capital expenditure as any expenditure that qualifies as a capital expenditure from its revenue, what do we do? We add back because what it is a disallowable expenditure. I hope that is clear. Please let us learn this format. We are going to be using it for answering of our questions. Thank you. The second thing we're going to be looking at is private or personal expenses. I don't think I have to overflog this one. It's something that we have always been talking about. And as I'm going, I will be talking about the what is it called now? The criteria that each of them falls under. For instance, this capital expenditure now, we can see that it is not um this one, it looks like it's even like enters everything. It's not only for the purpose of generating income for that year alone. If you incur capital expenditure, it's not just for that year alone. It's for the business, but it's not just for that year alone. It's for several years. All right. Of course, you can say that it is necessary, but the necessity is beyond the year. So this one, let me just leave that one out. For private expenses, number one, it is not for the business. It's not only for the business. Secondly, it is not necessary for the business. Your own personal necessity. Thirdly, it is not reasonable in any way. Fourthly, it's not exclusive for the purpose of your business, so it's a disallowable expense. It is not contributing to the generation of taxable income. All right, and I give several examples already in the course of explaining. I said, for instance, you got a car that is meant to be for the purpose of your business, but all you did use it for throughout the period is to take children to school. All right, it's already became personal expenses, private expense. So it is treated as a disallowable expense. The third one is provisional item. Provisional item are any item in the financial statement created out of the prudency concept shall be disallowed. You know, in accounting, we'll see that so that we can there's something we call the concept of prudency. That this expense I'm still going to incur it, so it is rational for me, it is prudent for me to make provision for it from now. All right, to make provision for that. So it is like a liability. It's always carried as a what? Like a liability that I'm making provision for this thing already. Okay, it's just a way of recognizing an expense that I'm sure I'm still going to like incur. Okay, so any provisional item, because there is no movement in cash yet, it is disallowed until the actual payment is paid, is made. So this here I say that for any expense to be allowed, payment must have been made out of pocket, or commitment or agreement must have been what signed for us to say that the expenses can be allowed. All right. Depreciation. Depreciation is a very, very common disallowable expense. Depreciation is an estimate for different reasons. We have replaced depreciation in taxation with what capital allowance. So anything depreciation would disallow it. All right. Gifts. Gifts. Gifts shall also be disallowed. But please pay attention. Please, two people should confirm that you are still with me. Pay attention to this. I want to. Two people should confirm to me that they are with me.
We are still here.
All right. Let me even put it to us as a question. We said that gifts should be disallowed, right? Of course, it should be disallowed because, in a way, it is not contributing to the income that is being generated. It is just, for instance, you have made your client or your customer happy. Okay, so, or sorry, you just out of your volition that you decide that you want to give your customer something rather, right? Should it be allowed? We said it is not. It might not be a reasonable expense, but let's think about this together. In a case where, for instance, instead of just giving you a bag as a gift as my customer, I then give you a branded bag with my logo, with my name written on it. What do you think? Do you think that is going to like contribute? Do you think I should? Do you think it should be allowed or not? Let me hear our response. Open Victor. What do you think? Do you think it should be disallowed? Do you think it should be allowed?
Okay. To me, I think it should be disallowed.
Okay, based on what we have discussed, why do you think so?
At least if you are giving a customer your customized bag, I think it's another way of advertising the product per se.
Yeah. I've actually answered the question. It's a way of advertising the product. So it is rational or it is reasonable that they are doing that, they are incurring that expenditure. Because someone else will see that bag and say, I need someone that that sells this, so and will go to the shop. And so in a way, it is contributing. So it is the same. It is similar to the company also printing or advertising on a billboard, which is also a necessary expense. Am I coming? Are we getting it, please? Please unmute yourself and communicate if you get it, please. Is it clear? So it's the same way I will go to a radio station. It's similar to what I would do if I go to a radio station and pay them and say that please let me talk about this my product for so minutes, for so hour, and I buy hour. The same thing I would do, like just by giving my customers or people gifts of branded products or branded items. Please, are we getting it? Please, can someone unmute and let me know that they're following? Oh yeah, yeah. Someone should unmute and let me know.
It's a gift. It's a branded item, right? But is it
Yes.
not still an expense to the company?
So what we are saying is that if it is not branded, then there won't be any question it will be disallowed because it's out of your volition that you have given it. There's nobody like saying that you must gift your customers a gift. But in a case where it is now branded, it is a means of what advertising the company. So that in itself can be said that it can contribute to the taxable income of that company. Love it. Do you get it?
Yes, I do.
Okay. So the sixth one is Dorime. You just made so amount of money. You're not doing Dorime. I hope you all know what Dorime is. Do you all know what Dorime is?
I don't know.
Ah, love it. You. How would you not know? Okun Victor, do you know what Dorime is?
Very well, sir.
Ah. Look like one that is still going to have one this evening, later this evening. Sounded like Abiodun, do you know what Dorime is? Abiodun can never know. It's only book that she knows.
I know.
Ah, you know what
Someone,
Dorime is. Someone told you.
yes.
Someone told you what Dorime is.
Yes.
I'm surprised too that you know. So actually, it's just like food, wine, and liquor entertainment. So they are actually generally disallowed. All right, they are disallowed because they are not necessary for the generation of your taxable income. All right, so all right, the third seventh one is legal expenses. Legal expenses. So any amount that you incur in settling disputes in court is also normally what's disallowable. All right. Let me look at other ones. Fictitious assets written off. That is, you know what fictitious assets are, right? Asset that they are non-tangible assets, not asset that you cannot, hold on to. For instance, goodwill, patent rights, pre-incorporation expenses, that you have now written off. They are not allowable. All right. Is that clear, please? Capital acquisition assets is also disallowed. It's similar to capital expenditure. Losses recovered under insurance. All of these ones are just general, unpopular ones. I'll just like read through them because of our time. Losses recovered under insurance or other contracts are also not allowed. Payments on unapproved pension, savings, or widows and orphan society fund will be disallowed. So for instance, this one now you are paying you have paid pension to a pension fund administrator that is not recognized, right? That is not registered. It will not be allowed. It will be disallowed. Loss on disposal of investments is disallowed. Withdrawal out of capital. You own a company. Your director is withdrawing money. It's not an allowable expense. All right. Or you are part of the directors in the company or the owners of the shareholders of the company and you are withdrawing. You are making withdrawals from the business. It's not an allowable expense. Defalcation of money, whether perpetrated by junior staffs or senior staffs, of any form, fraud is not allowed. You cannot expense it, and even if you expense it, it is not an allowable expense. Staff loan written off. You recruited someone, the person collected staff loan and jackpot. You did not see him again. You now wrote it off. It's not an allowable expense. Stamp duties and registration expense incurred in bringing the company into existence are also not allowable. Also, stamp duties on, of course, you understand that there's only stamp duty on when there is share capital. When there's increment in share capital, it's not allowable. All costs incurred in Nigeria or abroad with the aim of obtaining management fees unless they have been previously or unless they have not been previously authorized by the Nigerian authorities are what non-allowable. Appropriation item. All of these are things that are listed by the law. Some of them I don't even understand. I've not even seen them in practice before. They are very, very unpopular. All right. Appropriation item are not allowed. Lease agreement. So let's pay attention to this lease agreement well. Acquisition of new lease contract, both long and short, shall be what? Disallowed. Renewal of long lease agreement or contract shall also be what? Disallowed. Long-term lease, that is long-term lease is lease of 50 years and above, but the renewal of short-term lease would be, however, what? Allowed. So let me take that again. The acquisition, that is the first time of the lease contract, whether it is long or short term, the lease will be what? Disallowed. However, renewal of short-term lease agreement is what? Is an allowable what? Expense. You have used the land before, your lease has expired, you now want to renew the lease or the rent. It is an allowable what? Expense. I hope that is clear. Subscription is non-allowable except it is for the benefit of the trade. So, for instance, in my company now, they pay our an ICANN subscription for us. In fact, I don't even know what account to pay ICANN subscription to. And there are several companies like that. They'll pay an ICANN subscription for you. They pay your exam fees for you, except it's for the purpose of what? Of the business. The subscription will not be what? Allowable. Well, depending on the situation of the subscription for the staff, well, it can be argued that this one is for the purpose of the business. Let me give an example. Let's assume that for a particular role, the person would not be able to sign certain contracts if it does not belong to a particular institution, for instance, ICANN. So it means that if the guy does not pay that subscription, it might not be an active member, and hence it might not be able to sign the contract. So in that case, it can be argued that this expense, this subscription that was paid on behalf of this guy, is allowable, is necessary for the purpose of the business. So you can even see examples paid. So total trade subscription paid to professional body or trade association is allowable. All right. So there are some companies that we audit right now that belong to certain trade organization. All right. They have to subscriptions paid to those trade organizations are allowable deduction. All right. Bad debts. Number one, for bad debt to be allowed, number one, it must be a trade debt. So it must have been that the debt arose from the fact that you sold goods to a customer. The customer promised to pay you and then has not paid you. It is not debt from you borrowed someone money. Secondly, the debt must have been included as part. Please, if at any point you do not understand anything, please call me back. Please call me back. If at the points, I say that for the second point is that for the debt to be an allowable expense, it must occur in the year under review. It must have been as a part of the sales for the year of occurrence of the debt. That is, this debt that we are looking at, that you have called a bad debt, does it form part of the sales for this particular year that we are looking at? If it does, yes, then it's allowable. The third thing is that the tax authority must be able to see. Please, I hope we are jotting down. The tax authority must be able to see that the taxpayer has taken reasonable steps between the period to try to recover the debt. Not that someone just stole the money and you feel like, well, I'll reduce it I will enjoy the tax deductibility, and you just cross your legs and you're not pursuing the debt. No. There must be visible obvious, reasonable steps taken in order to recover this debt. The fourth thing is no proportion of the same debt must be deducted in the previous accounting period as bad debt. That is, you cannot be carrying forward bad debts. That is, you have deducted it this year. The remaining, you not know. And a debt, and I wrote here that it should note that a debt will be assumed to be bad where there is conclusive litigation. That is where we can see that we have tried our best, but this debt cannot be recovered. I hope that is clear. Number 22 for donation. Please pay attention to all of this because you have to apply the knowledge when you're answering questions. You have to be able to apply the knowledge of these things to be able to check each of the expenses that they are going to give you in your questions to see if they meet up with the criteria or not, to know if you're adding back or you're allowing. For donation, section Schedule 5 of CETA 1979 as amended listed out institutions to which a taxpayer can make donation and it will be considered as an allowable expense. So if a taxpayer makes a donation to any other body, any other institution apart from the listed institution, it's just Sarah. It's not allowable. So what are those institutions? What are those institutions? I didn't list them here. Let me check if I can see them. Religious organization, research institute. Let me just. I thought I put them. Oh, let me see if. Hello, please. Are you still following me? And I hope you are enjoying the way we are going gradually too. Are you following, please? Are you following me? Oh, please. Nobody's responding. All right. Okay, so let's see them here. Let's see anything of such here. Of course, there are general ones that we should know, but I just want to list them out. So the general ones are religious organizations like churches and mosques. Then research institutes like universities. And let me just confirm. Sorry. Okay, let me get back to you on that. I thought I actually included them in this note. I will include it and send a revised one, or I will just send it as a separate note to you. Is that fine? But the normal ones are religious organizations, research institutes. What other ones? Those are the ones I can remember offhand now. But let's go on, please. I will check them as separate, and I'll send them as a separate document. Okay. The 23rd. Okay, then there's something that we should take note of, please. There are conditions, even aside the fact that the company is making, these donations to institutions that are approved by the law, by CETA. There are two things that must be fulfilled for this donation to be allowable. Number one, the donations must have been out of the profit of the company. Number two, they must not be in capital nature. You cannot say that you want to go and donate tractor or in capital expenditure, a capital asset, a fixed asset to a company, and you expect that it to be allowed. No, it must not be of a capital nature. and it must be made out of the profits of the company. Please, I hope we are jotting down. I hope we are jotting down. All right. The 23rd thing is the doubtful debt. Doubtful debt will only be allowed if it is specific. Provision for doubtful debts will be only be allowed if it is a specific provision. Note that provisions like general provisions are disallowed. In this number 23, we are referring to provision for doubtful debts. That is, I'm already thinking, this debt may go bad. I'm not sure yet, but it may go bad or it may not go bad. All right. At that point that I'm making provisions, I must be able to check these doubtful debts. And what do I mean by specific? I think that should even start from there. What do I mean by specific provision? Specific provision is a provision that you made for a doubtful debt that you can still trace the customer or the person that is owing you. So, for instance, I'm attending a particular school. I've not yet paid the school, but I still attend. I enrolled for the school. I have not paid the school. The school can actually trace their debt to me. So in that case, it's what a specific provision. If they make a provision for that doubtful debt, they can trace it to me, so it is reasonable. All right. But for general provisions, it is disallowed. General provisions are generally what disallowed. But specific provisions, you can trace or attach the debt to a particular person. All right. So that is an allowable what expenses. Do we have any question at this point? Before we go to income. Before we go to taxable income. Okay. Any question, please? Muibat, do you have any question? Elizabeth, do you have any question? Elizabeth, do you have any question? What will make this thing I'm teaching you make sense to you is that you are jotting. It's a long note.
No, sir.
Is there any question? Okay. What will make it make sense is that you are jotting the salient points. All right. Because it's actually very important. Okun Victor, is there any question?
No, sir.
Abiodun, what about you? Is there any question?
No, sir.
Okay. Abiodun, is not this one that I will now be seeing messages on my WhatsApp on Monday. I'm just joking. You can always ask your question. My WhatsApp is open. All right. Let's continue, please. Taxable income omitted in the financial statements. This can be referred to as income made from the business, which are taxable, but was mistakenly or deliberately omitted to evade tax. Like I said a lot of companies do it. Companies do it because they are trying to reduce the profit that they will disclose to the tax authority. They will deliberately remove some income from their financial statements. All right, because they know that the more the income, the more the profit, and the more their liability. And I must say that at this point, we must all know that evasion of tax is a criminal offense. It is actually money laundering. All right, that you are deliberately like deciding to omit income, all right, or falsify expense just to beat down, your tax. If it is, that is an evasion of tax and it's criminal. All right. So we have examples here. We say it said omission of rental income. Rental income normally should be taxable. Understatement of this should be Roman figure too. Understatement of sales figure. When we discover this, what we have to do is to add it back to what? To the income for the year, or add it back to the profits in the financial statements. Let's look at examples of non-taxable income. Examples of non-taxable income is sales of what? Fixed assets. When we make a sale of our fixed assets, what we do is not to go and take the consideration or the income from that sale and go and add it to our general sale or income. No. Remember that we already dealt with how to deal with sales of fixed asset. What do? We compare the sales to the tax down value. We decide whether it is a balancing charge or a balancing allowance, right? Depending on if the income or the consideration is higher than the tax written down value. If it is a balancing charge, we will restrict it to the total allowance that has been enjoyed on that particular asset, and then the remaining will be taxed on that capital gains tax. That is the way to handle sales of fixed assets. But we are not going to go and add the income to the general income of the normal business, day-to-day business. No. So if a particular company has done that, what do we have to do? We deduct it back. Number two is sales proceed of investment. This is also what? Disallowable. This is the way to treat this is also to like compare it to the costs or the fair value of that investment at that particular time and determine if there's a gain. So if there's a gain, it will be dealt with under capital gains tax. That is, the gain on that investment will be taxed at 10% CGT. Of course, there's different laws around that. If the proceed is reinvested and all of that, blah blah blah. We are going to deal with that when we get to capital gains tax. All right. The third thing is profit from disposal of fixed assets. We have talked about sales here. Then the profits, that is, after deducting all the necessary expenses, does it still mean that the assets, the remaining profit forms part of your income? No. Taxable income? No. So if this has been added before, we'll deduct it back. Any reversal into income of a previously allowed expenses. Sorry, give me a minute. Give me a minute, please. This movie is disturbing me. All right. Any reversal into income, please pardon me for that. Any reversal into income of previously allowed expenses is also what? This is also non-taxable. So for instance, you already recognized um made provision for a doubtful debt, a general doubtful debt, which is a disallowable expense. Then you now realize that this income, this debt has not been recovered now. Because you have disallowed it before, you cannot allow it as an income now. Because it forms part of your what disallowable expense before, it cannot form part of your allowable income now. All right. Dividend received, others are interest on, okay, what is this? Dividend received, treasury bills, for example, interest on federal government bonds, treasury bills, and this is not clear, sorry. Dividend received, interest received on government bonds, treasury bills, and blah blah blah. They are also non-allowable. That is what we are saying is that the return on your investments are non-allowable. All right. Okay. I think this is a repetition. Illegal income such as bribe. This is not bribe, please. Bribe is also not what's allowable. I don't know if I should go. Let me just go through it. That's the only thing that remains before our illustration. So allowable expense omitted in the accounts. What do we do to them? Like we said, for this non-taxable income that has been included in the account, what do we do? We deduct. For this taxable income omitted in the account, what do we do? We add back. For the non-allowable expense as well, we also what? We also add back. Okay. I hope you are following. Now, for the allowable expense that have been omitted, what do we do to them? We have to deduct them, because if they have been omitted, it means that the profit would have been overstated. But the truth of the matter is that in practice, tax authorities don't pay attention to areas like this. In fact, it can never happen that a tax authority will now come and tell you that this expense is allowable. Now, why didn't you allow it? It's not possible. They will never do that, because they have a target. They are trying to like make money for the country. The more tax they they are always looking for every means to make more tax off every taxpayer. All right, so I've never seen it, and I don't think it will ever happen. That they will not be the one finding out for you that you ignore this expense. Why didn't you include it? It's not possible, because what would that do? It will reduce your profit and it will reduce your liability. So, but let's look at examples. So, examples of allowable expenses that can be omitted are interest on loans that you obtain for the purpose of your trade or your business. The interest on it is actually allowable. And that is one of the reasons why debt is actually a cheaper alternative to equity. You will still do a lot of that in SFM, in PM, and all of that. You might have already been doing it already, self. So it's a cheaper alternative means of funding or capital, because the interest on it is what's allowable. Dividend, on the other hand, is not an allowable expense. You can see it here. Dividend received. Dividend is the return on equity, right? However, interest is the return on debt, so it is an allowable expense. Rental of premises is allowable. Repairs and replacements linked to office, factories, buildings used for business activities, they are allowable. That is what we call repairs and maintenance, allowable. Dubious and unrecoverable debts are allowable. Contributions to approved retirement and contingency funds are allowable. Foreign exchange losses, this is very common this year. I mean, the way foreign currencies are moving against Naira is really, really alarming. Okay. I mean, virtually all of the clients that I've worked with this year, this is one of the things that form the most part of their expense. All right. That really eat into their profit. This foreign exchange loss. It's a serious thing. It's a big deal now. So it's an allowable expense. Thank God for that. Prospecting and development expense are allowable expense. Donations to accredited bodies, like I mentioned, I'm going to like get a list of all of the accredited bodies and send to the group. Cost of gift to customers. Okay, when we incorporate the element of advertisement, is what is allowable, and we do not include food, drinks, or cigarettes. It's allowable. Legal and professional charges in respect of debt collection in order to increase income. So if you can link the legal or professional charge to the fact that you are trying to like recover a particular debt, or which will definitely increase your income, it is what it is allowable to be allowable. Any expense, any other expense that is wholly, reasonably, exclusively, necessarily incurred for the purpose of the business will be what allowable, like we mentioned in the general explanation or in the general definition. I hope that is clear. I hope that is clear. Who has a question? I hope that is clear. Any question up to this point? Any question up to this point? Any question up to this point? All right. Let's take the illustration. For this first illustration, it says that what are the conditions? Okay, let me allow someone to read. Ok- Okun Victor, please read the first question for us.
Okay. First question says, what are the conditions to be followed in order for the donation to be allowed?
Okay, give us one of the. There are two conditions that I listed out. What is the first condition?
Okay. We said it must be a trade debt.
Hmm?
It must be a trade debt that and must be included as part of sales.
You're already mixing it up. Oh. That is for
Okay.
that
Okay,
is
that's
for
for bad debt.
bad debt. Yeah.
Yeah, okay. Okay, for donation, it says
Who wants
must
to
be made
help me
out of
contribute?
profits of the company.
Definitely, that's the first one. It must be made. So the donation must be made from the profit of the company before it can be allowed. What's the second one? Love it. What's the second one?
There are a list of companies that
Okay, that's
are liable. So any company or any organization not on that list is not which is allowed.
okay. Okay, then there should be one other one then. I will accept that too because it's a condition. If you donate to a company, a body rather that is not part of that list, it does not matter whether it is from your profit or the second condition is fulfilled as well. It should not be
The
allowed. But
expenditure should not be of the capital need.
thank you so much. It should not be of a capital. Thank God. It shows that you guys are actually following. Thank you so much. Thank you so much. Okay, the second question. Who is the second question for us? Elizabeth, please read for us. I cannot see the screen right now because I'm on this thing, but please.
What are the conditions for allowing bad debt as allowable expenses?
Okay, what are the conditions? Okun Victor, don't say anything. Okun Victor already mentioned one of it before, but who wants to go? Okay, Elizabeth, yeah, go first now. Give us one condition. Yes. Elizabeth, rather, give us one of the conditions now.
I'm trying to look at what I just said, sir.
Okay. It's a moment of, I deliberately put that illustration there. It's a moment of catching you people red-handed in case you have not been jotting. But because there's no how you would have committed all of this information to mind at this short time. So I want to be sure that you have jotted.
Let me give one. So the
Okay.
taxpayer must have made a reasonable steps to cover the debt.
Yes. Thank you so much. Thank you so much. Elizabeth, I'm still expecting one from you. Who else wants to give another one? Victor, do you want to help us with one? You already mentioned one before. Do you want to repeat it? Victor. We said that the bad debt must have been from the sale in the year of occurrence, right? It must not be. It must be a debt from sales, and that sales must be in the year that we are looking into. Did we say that? I think we have one more. People are leaving the class when I started asking questions.
Yes, sir.
What is the third one?
Must be a trade debt.
It must be a trade debt. Thank you so much. All right, let's continue. All right. Where's the illustration again?
Sorry,
Okay.
sir, the first one.
The first what?
The first one.
Which first
The
one?
solution to the question.
I don't get what you're saying. Is it the first condition?
Yes, sir.
So we said that it's the debt must be from the sale in the year of occurrence.
Yes, I have
Must
that.
okay.
Must be a trade debt.
It must be a trade debt, yeah.
And the last one, sir.
What other one did we give? I think I forgot it too.
I think the one that Lovett said, I didn't get that.
Okay, Loveth, what did you say? Okay, yeah, that the taxpayer must have taken reasonable steps to try to recover the debt.
Thank you, sir.
Yeah, you're welcome. All right. What do you understand by the following terms? Wholly, exclusively, reasonably, and necessarily. So we are going to take it one after the other. Abiodun, you will take wholly. Elizabeth, you will take exclusively. Okun Victor, you will take reasonably. Let me look at the third person I want to. Okay, is even complete. Okay, I've given Elizabeth. Have I given you any? What have I not given? Oh yeah, now the person should respond. You people, when it's question time, you will not respond. Okay, let me take it again. Elizabeth, you take wholly. Okun Victor, you will take exclusively. Lovett, you will take reasonably. And Abiodun, you will take necessarily. All right. Oh yeah, shoot. Oh yeah. Elizabeth, over to you. Only, what do you mean by what do you mean when we say an expense is only incurred? Yeah. Let's not waste too much time.
That
Yeah,
is
now.
the expenses. Okay, I'm trying, sir.
Okay.
That the expenses is from the business. The expenses incurred is directly from the business. It's not a private. It's not
It is only
a personal
not from
expenses.
it's for the business. At least it is entirely for the business, for the purpose of the business.
Yes, sir.
It's not from the business, it is for the business.
For the business.
All right. That is the entire purpose of that expense that you're incurring is solely for the
business.
business. All right. Please take note of that, please. Exclusively, Okun Victor.
Okay, we said an expense is exclusively incurred if the business alone obtain the benefits of incurring that expenses.
Okun Victor, thank you so much. You're just reading my listing for me back. But it's good. Yes, it is exclusive if it is only the business that is obtaining the benefits from the expenditure that is being incurred. Thank you so much, Okun Victor. Oh yeah, love it, reasonably.
So I'm basically saying that there are certain expenses that might be wholly, exclusively, or necessarily incurred. So, but they might not be allowed their own business. They're certain
Okay.
talking about the materiality of the amount.
We have to check the materiality. We have to check the materiality of the amount here.
The practice in the industry.
Practice in the industry. Thank you.
The amount of the profit or loss for the period.
The amount. Okay.
General business environment and comparative amount of students.
Thank you so much. Thank you so much. What about necessarily? Abiodun, necessarily.
It is necessary because for the company to derive their income, they have to incur a specific expenses.
Shake now. No more than if you say that in your exam, you get your full mark. Thank you. Okay, I want us to like try to attempt this question. All right, let's attempt this question. Let's attempt this question. So let me try to open an Excel. Okay, I think I have an Excel that I already created for this. Adjusted profit. Okay. Just quickly. Oh, right. Okay, so someone should read this question for us when I'm trying to open the Excel work platform. All right, someone should read it for us. Abiodun, please read. Illustration 2. Abiodun, are you in this class?
Yes, I am.
Yeah, read.
Okay, I'm looking for the question at the moment.
It's on.
Okay,
I'm
in
projecting
August
it now.
2008,
Okay, continue.
in August, in August 2008, Chukwu Merije, an entrepreneur who has just commenced business after retiring from a federal government parastatus, invited you to his office in connection with the first set of accounts that was prepared by his staff. The summary of the accounts for the period 1 January 2007 to 30 June 2008 is as follows. A review of
Hold on.
the records, however, revealed the following. The capital allowance due for 2007 years of assessment is 120,000, and that's like that. Compute the adjusted profit for the relevant year of assessment.
Compute the adjusted profit for the relevant year of assessment. So I'm going to split my screen just for us to be able to like answer each of them side by side. Right. So illustration 2. So we have, what's the name of the company? Let's say Chukwu Merije. Chukwu. Chukwu. Okay, Chukwu. So they said we should compute the adjusted profit computation of the adjusted profit. So what is the format? We remember our format. We have two naira signs. And the first thing to do is to what? Bring in your what? Net profit as per account. And in this case, our net profit is what? I won't work this thing in thousands. I can see that every one of them has, let's work it in thousand. Okay. What is net profit per account, please?
That's around 95,000.
595,000. I hope we are all seeing where we are getting this figure from. 595,000. I'm gonna make this to 595,000. All right. Yeah, fine. 595,000. Then we'll add back disallowable expense. First of all, disallowable expense. What disallowable expense can we see? Number one, if you check through this, you will see, first of all, you will see depreciation. Depreciation, number one, you have to know that, of course, it is what disallowable expense. So what do? You add it back, right? Let's communicate. You answer question now, right? You're not saying
Yes.
anything. Can you talk? Yes, okay. Salaries and wages, is it allowable or disallowable? Oh yeah now. Please, everyone should mute their mic at this point. Every one of you should mute your mic at this point. Oh yeah. Everyone, please. Abiodun, you are not still muting your mic. Love it.
Reliable.
You people, what's wrong with you people? Well, God save you that guys are not in physical class. Okay. Depreciation. I didn't even write this thing very well. Number one, I said depreciation is disallowable, right? This depreciation. Disallowable. Then I was asking, let's even go through it first, one after the other, before we jump. So salaries and wages, are they allowable or disallowable?
Allowable.
Reliable.
Okay.
Thank
Carriage,
you.
are they allowable or disallowable?
Carriage.
Carriage,
They are,
allowable.
they are
Allowable.
allowable because they form, most of the time, if it's carriage, they form part of your cost of sales, isn't it?
Yes.
They form part of your purchases. General expenses, we cannot say if it's allowable or disallowable because they are not specific. So when you see something like this, you now have to go and check the notes if they broke it down. Is it clear? Electricity, let's say skip that one. Electricity, allowable or disallowable?
It's allowable.
Electricity,
Electricity.
did you say disallowable?
I say allowable, sir.
Oh, okay.
Because we use it.
Depreciation, yes. Depreciation, we already said that one is disallowable. Interest on loan, allowable or disallowable? We will allow it except there is a note in the this thing, except there is a disclosure in the notes that the loan is not for trade, it's not for the business. Okay. Bad debts, except there is a note in the disclosure, or there's a disclosure in the note rather, that this bad debt is not for trade, or there is any of there, or they have not met any of the conditions. If not, we are going to allow. Is that fine? So you can now put a note after you have solved it that you assume that this loan, the interest on the loan, is for a loan that is for trade and for the business, and also the bad debts has met the condition in that it is for a trade debt, and the customer or the taxpayer has done um, carried out reasonable activity to try to recover the debt, all right, and all of that. But if there is no distance, so for general expense, the first note that we have here is a breakdown of the general expenses. So it says number one, legal expenses. So the general expenses is broken down into this. Legal expenses in respect of new lease. Is it allowable or disallowable?
Disallowable. Disallowable.
What do you say is disallowable?
And I think for new lease, then if it's a long term, for short term lease, it's allowable.
Okay.
That's for 50 years.
Even if it is short-term lease, if it is a new lease, it is disallowable. But in the
But what,
case where you are renewing the lease,
renewing, yes, renewing the lease. Short term.
renewal of short lease is what is okay. So that one, we can agree that we are adding back, right? Expense 85. Cost of luncheon voucher to staff
Allowable.
disallowable. It's not a reasonable expense. Without the luncheon, would the company produce goods? Would they not? They would. Why are they giving cost of what? Why are they giving luncheon voucher to staff? I'm talking as if I'm being mean, but from the point that is the way the tax authority will reason. All right. So I have to put myself in their shoe to be able to like accurately like interpret the question. Printing and stationery, is it allowable or disallowable?
Sorry.
Allowable.
Yeah,
Come on, give me this dog.
Seems
it,
allowable.
it is allowable now. It's stationery. Every office has stationaries now. It's allowable. And every office has like printing expense and stationery expense. It's allowable. Personal donation, they specified
Allowable.
personal donation.
It's
It's allowable.
allowable.
Yeah, we are going to add it back. 6,000, right? And they said others, they now included, now expatiated that it's all allowable. Okay. Then pre-commencement, the second one, we're going to have it later, capital allowance. It will be later after we have adjusted our profit, and we're going to bring that in. Pre-commencement expense have not taken into consideration in the profit or loss account and loss accounts. Which pre-commencement? Is there a pre-commencement expense? Let's check it together. Is there any pre-commencement expense here? In the question, is there any pre-commencement expense? Okay, there is none. And they said that it has not been taken into consideration in the profit or loss account. It does not have to be, because it's not an allowable expense. All right. Is that clear, please? Chukwu Mereje paid for electricity of his parents' house in the sum of 25,000 during this period, and this has not been included in the accounts. Can you see what they said? So it has not been deducted, so you don't have to like they are trying to like confuse you. It has not been included in the account, so you don't have to like do any adjustment for that, right? If they say it has been included in the account now, then we have to add
Is
back.
the one in additional information that going
Eh? What did you say, please? Come again now. Okay, I feel like that is not to me.
Sorry, sir, do we refer to that as a personal?
So the reason why you will not adjust for it is number one, it is personal. So if it is personal, so it is disallowable. But they now made a caveat that during this, and I said this has not been included in the account. That is, they have not deducted it before. So the only reason why you add it back is if they have deducted it before. But now said they have not included it in the account. Can I say that? Do you understand what I'm trying to say?
Yes, sir.
All of these ones that we're adjusting for is because they have been, see, these general expenses now, it has been deducted to arrive at this net profits. But this one now, it has not been taken into consideration. It is not part of what forms the net profits. All right. So if we are adding back, it's like we are adding back what has not been deducted before. Do you understand? So we have to do the question carefully too. Number 5, dividend was received from some of Chukwueze investment in stock. This amounted to 125 during the period and has been omitted from the books. So you can see this one again. It said it has been omitted from the books. So dividend, is it an allowable income or disallowable income?
None.
Non-taxable.
They said they even said that it was received from Chuk. Okay. And now Is it allowable? Whether it is income or expense, it is not taxable. So a dividend income is like a franked investment income. You cannot tax it again, right? But that is the story of another day. But in this case now, even if it's an expense, it is what? It is non-taxable, right? According to what we have learned, it's only interest on loans that is taxable. That's why I was explaining earlier that loan is considered to be cheaper than equity. All right. What other thing? Chukwe Mezire is in the business of manufacturing cosmetics for local markets, which he manages with a few technical and administrative staff. Being a new entrepreneur, he's confused as to how to go about the matters of the business. For the first assessment here, he wants you to prepare a report that would enlighten him in the following areas. Commencement rule, talk about that. Allowable, and this question is actually an advanced taxation question. Allowable and disallowable expenditure, incomes exempted, capital allowances, adjusted profits. So all you have to do is just to briefly discuss all of this. So what is commencement? We have talked about this. Talked about allowable and disallowable expenditure. Talked about um, non-taxable income, income exempted. Talked about capital allowance. Now we are talking about adjusted profits. So the requirement is that we should compute the adjusted profits for the relevant years of assessment. So for 2007, right? 2007. So our year of assessment would then be what, 2008, if I'm correct. So I believe that we have adjusted for all that we're supposed to adjust for. There is no other income or expense that we should factor in. Or is
What
there
about
any
capital
more?
allowance?
Yes, I'm coming to that. We have to like get our adjusted profits. Okay, I think it should form part, but let's adjust for our disallowable expense first. So we'll do a sum of our disallowable expense and adjust it from, we're adding it back, right, and adjust it from. So the sum of our disallowable expense is 510, right? Let me do this. It's 510. Then we'll bring it here. Okay. So what do? We add it to this. So we have our what? Accessible profit. Our adjusted profits. Accessible profits. Accessible profits. This will be this plus this. All right. Then we'll now have our what? Capital allowance, which will be a deduction.
Sorry,
All right. Understand.
sir.
Okay. Shoot, please.
Hello, sir.
I'm listening. I'm listening.
Since you are using 1,000, you haven't changed that 595. You are still putting 1,000 there.
Oh, thank you so much. Thank you so much. That's a very common mistake. Thank you. All right. So we have 1,105 down. Thank you. Then our capital allowance now will now come in, which is what, 120. Am I correct? Then we have our adjusted profit for the year, which will now be what, this minus this. I think that it is very simple once you understand what the loss is. So what I need you to do is to revise everything. Does anyone have any question about this computation? Any question, please? So we're going to answer one more calculation question next week. Try to sorry, excuse me, brother. I'll try to look for a question that is more comprehensive, that is larger. I thought that this question was going to be tough. Apparently, there was nothing in it. Most of the adjustments were not in the books, so they did not even need adjustments. So I'll look for a question that is tougher and more comprehensive for next class. So we're going to answer one more question, then we'll move straight into capital allowance. Hope that is fine. So what I need you to do is to revise, especially the disallowable expenses. They are the ones that are so much. So this from this number 1 to number 23, and try to lay your hand on any question you can find, maybe in your past question or in your pack. Just try to solve a question before the next class. So, and make sure you revise all of this especially disallowable expense, because you always need the knowledge to judge whether to include a particular expense or to ignore a particular expense. I hope you understand what I'm trying to say. Any question, please, before I bring the class to an end. Any question? Abiodun, do you understand everything we talked about?
Yes, sir.
Love it. Do you understand? All right. Elizabeth, what about you?
Sir, it's only I'm having issue with the capital allowance.
Okay. What is the issue that you're having with that allowance?
That 120, sir.
It is in the question. They give what in the question. What is the issue that you're having with
Okay.
it?
It's given.
Yes, it was given in the question.
Okay.
It is part of the notes. See, note 2. The capital allowance due for 2007 year of
I've
assessment
seen
is.
it. I've seen
Yeah,
it, sir. Thank you, sir.
you're welcome. All right. What else have I not asked? Okay, that's everyone. All right, please, you guys should try to make sure that this your sacrifice make it worth it. Don't just leave the class and just not can just close your book until the next class. Try to you are staying up late, paying money to to be taught. Make sure you are going through what you are being taught. Make sure you jot during the class. Go over what you are being taught. Read extensively. Read other things. Try to lay your hands on questions. Solve. All right, so that I want to be able to like rejoice with you. At the end of the exam, I was so happy. Most of the guys that lectured with us last year, the last batch rather, most 80% of them, I can boldly say that 80% of the guys in our center, in the branch in my own, I'm very sure of the branch where I lectured, more than 80% of them qualified. I think about 80% of them qualified. Right. The same thing with the guys in the skills level too. A lot of them like passed well. So please, the things that we are teaching you, make sure you go through them. We as lecturers are always happy. You see the way I'm saying this proudly now. We're always happy when the students perform well. And that's the reason why we try to like give it all our best. Just sincerely trust me. With the amount of work that I've done this week, I would have said that it is not me that was to come and lecture this night. But I was telling my colleague that I just have to show up, and not just showing up, give my best to it. In fact, it was this evening when I go back from work, I just like perfected this material. That's the reason why you will see a little few here and there, this thing there, typographical errors there. All right, please and please go through what you are being taught. Try to give it your best and do it at once. There's nothing as sweet as doing this thing at once. I did not personally, I can tell you from personal experience. It was until I got to professional stage that I actually had to like rewrite a particular course. To until like from ATS one up to skills, I was doing them once, passing them once, and it is so sweet. And because I did not have an accounting background, that was like really what was gingering me that if I can pass this thing once, I can. So it kept me going. ATS one, ATS two, I did ATS three, I passed skills, I passed everything at once as well. Professionals, then I had a little delay. I failed too, but I passed it immediately in the next diet and the diet that followed. But at that point that I was in the professionals, that when even I saw this result, I knew that nothing can happen. I'm already a chartered accountant. Because these are two papers that will now make me chartered. Me that I've been passing from BTS one. It's not possible now. And I wrote it give it my best again in the next listing. Now passed. So it is on that day when you're actually when you're taking your oath, or when you see your final result, that you will see the worth of all of the sacrifices that you are putting into it. So please and please do it once and let it be done with. All right. Pray that the Lord will help every one of you in Jesus' name. Please take care of yourselves and have a
Man,
great.
thank you.
Yeah. All right. Bye.
Thank you, sir.
Yeah, you're welcome, everyone.
Bye.
Bye.
Bye, sir.
Good night.